Okay, good afternoon, everybody, and welcome to Gary's Traders Group. This is your host, Gary Kumeski. It is Monday, November the 3rd, a little bit after 4 p.m. Eastern Standard Time. I want to welcome all the members who've been faithfully sticking with this today, as well as new people. I hope you enjoy it and get a lot of great information out of this. Got a lot to go over, so without any further ado, let's get through the disclaimer real quick. This webinar is for educational purposes only. I am not a licensed representative or giving any trading advice. Trading does involve risk, especially derivatives, so make sure that you have all your ducks in a row before you make a trade. And hopefully these webinars will help educate you in making that trading decision. Okay, Bob, you didn't trade Priceline. Anybody else trade Priceline? Dum da dum dum da dum dum da dum dum da dum dum da dum. Nothing yet. Let's keep an eye on it. Anybody out there, when you hear, please tell me. Oh, gosh darn it. It's coming out tomorrow morning. What am I doing? Sorry about that. So nobody traded Priceline, right? Nobody on this call traded Priceline? Strangle? Bull call? Bear put? Okay, Bri, tell me what you did. You buy a directional? Okay, call option. Okay, did you do the front month, December, January? Spent a lot of time going over this with people today because it was so hot in the topic. Something interesting happened today. Look at that right there. The 1250s, 1,961 contracts brought today. And then you stretch out to the 1300s. Can't do it. Hold on. There it is again, right there. 533 open and 1,949. Very interesting. I mean, that's cheap. $8 on a $1,100 stock, and that's dirt cheap. We expect almost a 12% move on this thing. 12% on $1,188 still puts you over $1,300. So if anybody did that, I mean, that's crazy out of the money. But these are in $2.50 strikes. So now, of course, the Novembers. I don't know, when did you get in them, Brian? Today, or did you buy them earlier? I mean, one of the things that I shared with people going over Priceline today, I mean, it's a great company, and that's why I want to go over it starting out, is whenever you see something strong and powerful in a great company like this, I got 12.11% interested. Early today, yeah, should have bought last week. That's the point I was trying to bring home. Brian's kind of learning a lesson here as well. Remember, always, guys, always guys and gals, my apologies, start looking at things early, a couple of weeks. Bottom line, a couple of weeks. You don't want to miss the train waiting at the train station, and you don't want to chase a trade. So when you really look at this, right around here was the opportune time to get in. Now, if you move this thing back to, let's say, the 15th is an end date. Well, there's the 17th. You can certainly see something important right here. Can everybody see that? Right? This is, you got one day of a higher close and a higher high, and a third day of a higher high, but not a higher close. So I'm sorry, this is on the 3rd. My apologies. Go back to this. I wanted to just highlight this area. There we go. This is what I wanted to show. 3 days of higher highs and higher closes. When you combine that, and this is just paying attention, linear regression is very powerful. If you just combine that with common sense, what did the macro picture do from September, last week in September, to October? We know, right? Here's the macro picture, which is what I always start out with. We know things just tanked. They bottomed out at 1,500 on the Dow, 1820 on the S&P, and 4116 on the NASDAQ. We had triggers that told us this thing is turning around. And if you look at this date right here, this is on the Dow, that's the 23rd. This date is the 21st. And of course on the NASDAQ was the 21st. So even if you didn't have my chart setups and you're strictly using Best Choice, and you're saying, I know Priceline is great company, they got earnings coming up, I'm going to position myself early. Now, one of the people I trained who became the claim to fame and poster boy of Best Choice is a guy named Chris Cross. In 2010, he traded Priceline, and he made an absolute killing on it. Also just traded ITT, ESI in the beginning of the year, as well as Netflix. Made a $250,000 in those first 3 weeks trading out of 6,500. Now, what he did with Google, though, which was intelligent, and this is just listening to some of my training and what I say. He saw this composite. It's pretty blatant. Where Google really starts running. Did it do it this year? Let me do best profit. 12 it didn't. Actually, 12 is when it lost money. But guess where it started? Right? It started way back here. He started buying in September for October's. Sold October's in the beginning of October, and then bought November's and enjoyed that entire run-up into the Google earnings for 2010. And of course, that's what it did. And that's where he literally made $1 million putting $100,000 down. So, I mean, that's a very extreme example, but the point is driven home. Start looking at these things early. The other way to trade it is to wait for the noise of the day to settle. What happened today's trading on Priceline, if you look more intraday, let me go to intraday. Priceline, PCLN, sorry. See this wonderful run-up? I mean, this price of the stock is 1077, 1074 down here, and that's 10 days ago. That's the 20th, which is about when I was showing on Best Choice on linear regression, right about here. That was the third, well, where was it? No, you'd have to wait to about here. Any place between those 3 days. Am I all the way over? Any place in these 3 days, you had 1, 2, 3. So 1, 2, or 1, 2, 3. Any one of these days. And of course, this is, let me go to 6 months. Were great days. So I don't want to belabor this point, but what happened today is people took their profits off the table. And that's why it pulled back. They enjoyed that huge run, take your money off the table, play with the house's money, and then go through earnings. The other way to play it is wait till the noise of the day settles. Now, that's not always possible for people because I understand people work and have other things to do, and you can't always watch the market, and so you make the trade in the morning and try to get the best price you can. But then you kick yourself in the butt if this is what happens during the course of the day. If you're coming in here someplace, and this is what happens, a sell-off happens towards the end of the day, well, that's people taking their profits before earnings. So let's not belabor that. Also, the other thing to keep in mind, somebody asked me is, well, which month do you play? Do you play the November? And how far out to go. Obviously, if you're using the math and so forth, it's really is like when it was down around this area. If you do the math, it takes you out to about 1320, on an average, more or less. And of course, when you look at volume and open interest, you can see where people are loading up. Even on the monthlies, you can see the 1300s is where the action is. Now, delta is 12, but an earnings trade, that's not that critical because you're expecting a pop. On the other hand, if you waited towards the end of the day, let's say you would have got around $5, but if all you're looking to do is make a trade and take your money off the table, and you're looking for a pop, you can actually go closer to the money. And yes, there's some more IV, which means these are a little bit more higher priced than it would be on the monthly, but it's all relative. If the thing pops and goes to 1300 and you're buying the 1250s, you got $50 of intrinsic value. As the Goombas from New York would say, forget about it. It's all done. So, okay, let's not belabor that. Macro picture. New highs today all across the board. I threw in the 78.6 to show you the potentials of where things could stretch to the S&P. You're looking at 2041, 45.85. Oh, I know. Would anybody be interested? I read an article. I can include it as a link in the Excel sheet. I read an article. Bob, this would be interesting to you, I think, is if the Republicans win in the GOP, which everything is slated that that's what it's looking to do, which are the best stocks to play and which sectors and stocks will benefit the most? There's like 12 stocks. It's a great article. You guys interested in that? Yes, no? If so, I'll find the link and I'll include it. Okay, well, that's enough. I get enough yeses. All right. All right, let's go to the micro picture. What's happening this week? Well, first week of the month. What always happens on Friday? Unemployment situation. Now look out for that. And jobless claims. These two things will affect the market, but unless there's a lot of unexpectedness, which I don't think there is, this is not going to drastically affect the market. You got international trade coming out tomorrow, so. And you got some of the Feds speaking on Wednesday afternoon, which I don't think will affect anything. The major FOMC meeting happened already, and they set the tone for the rest of the year. Now, of course, Friday we know it was the BOJ, Bank of Japan, that was unsurprisingly lowered rates, and that really made the market just jump up crazy. That's kind of why you see a little bit of a flat day today. I mean, it really was flat. I mean, 24 down on the S&P. That's flat, folks. This is pretty much creating a doji from a candlestick perspective. And you can see that reflected in the SPYs as well as the almost the VIX. See, there's a classic doji right there. But nothing tells us to watch out. You got a little curving over DPO, but nothing to really, I think, be concerned about. One of the things I could do real quick just to see how it looks is throw in the 786 resistance level or next level of 2041, which I already threw in. You can see the VIX is down low again around 14, curving a little bit on the hull, but everything still looks pretty positive. S&P looks up, VIX looks down. Now, you guys remember with Best Choice, and Pete used to show this in the Las Vegas show, or was it Arizona? I forgot. And it's just amazing how it just worked almost every year for him. Asterisk DW, oops. It's asterisk DWI, space X is the Dow. That's this area right here, the 24th of October to the 7th of November. "43 years, 28 out of those 43, 65%, Dow went up. pretty doggone high probabilities. Okay, can everybody see my charts? Jerry? It could be a connection. Bob, you see the charts? Leon sees it. Okay, Bob, Jerry, that's probably a connection of yours. Brian sees it. Okay. So this is pretty strong, and we're right in the middle of this right now. I mean, today is the 3rd, so we've still got some time to go up. Now, jumping quickly to what I think is going to possibly, and this is a contrarian play to the course of the trend, is Alta and shorting them. I know people don't like to short a lot, but guys, 7 out of 7. Alta's a strong company, and look where it's sitting right now as far as its historical lowest it's been to the highest it's been. So you're looking at about a 8% move to the downside, which would put you right around the 110 strike level for a directional play. There's a lot of people loading up here at the 105s. Just as much bullish action right here today, though, as well, which is interesting. I mean, that's huge. That's 4 times the open interest. So I'm a little leery on this thing, but historically speaking, and when you look at from a charting perspective, I did a fib retracement on this, and I did it on 6 months. And what I really wanted to do is show you what a 3-month looked like, because I think that's going to be more accurate in reflecting where this stock possibly could go down. One of the reasons I believe this is because of the huge pop it got, and it's just meanders sideways, guys. You see that? Right? And MAs keep moving up. One of 2 things happen. Price comes down. That's that leashing effect. See how price went away from the MA? This is the 49 exponential moving average. It moved away. Now it's leashing its way back, just like the dog that strayed away from and hit the top of the leash. Now you're pulling it back. Now it's straying away again. Now it could pull back again, and it may pull back to the area between here and here. So if you do a Fibonacci retracement on this, you could see between the 50% and the 38% would be the 110 right in this area as a potential retracement. So I threw that out there, folks, if anybody wants to possibly look at doing a short. You can always do a bear put spread. You simply right-click and sell a vertical instead of buying it. Oops. Buy a vertical, excuse me. So you're buying the 120s. Again, it's a directional play. You're limiting your profit, but you're also limiting your loss. It's going to cost you $1.75, $175, but you have a potential of making $325 on the short term. And I think this is a short-term pullback. Because we're coming into Thanksgiving time. Remember also, folks, the Friday before any holiday weekend, you can always buy the SPYs or the SPX and make money, or any of the ETFs, because there's always a rally the day right before a holiday, be it the 4th of July, Thanksgiving, I mean, what happened the Friday before Halloween? Right, folks? I mean, sure, that was fueled by the Bank of Japan, but it's also typical that that's what happens before a holiday, even though Halloween isn't really technically considered a holiday where, the banks are closed or post office isn't delivering mail. But anyway, this is a limited way. This is a way to limit your risk, but it's also a way to be able to perhaps profit. And look, you can almost double your money on this, which is another way to trade this. Okay, so that's Alta as a short. The only earnings trade that I saw this week's, folks, was Priceline. And I imported earnings from FinViz. I looked through all of them. It was 123. Even though I took those 123, that's based, there's tomorrow alone 317 earnings plays coming out, but I'm talking about sorting them with volume of 500,000 or greater, an optionable price of $40. You know how we all do that on FinViz. And then, of course, I ran them through the wizard, so it saved me a lot of time just to be able to selectively find the trades that perhaps would be something of benefit to us to look at. But when you really look at this, folks, everything starts from the 20th on. The only thing that's in the beginning is Priceline. Even this short AER, which I really haven't heard of, it's 8 out of 8, and it's kind of spotty with, you know, I don't know how this software calculates this, but that's considered a short, I guess. You know, and when you look at any kind of open interest or volume on, what's it, AER? You know, nothing to really get excited. I mean, there's some bullish move right here, which is, again, when you see these kind of anomalies, somebody knows something, somebody's loading up. And that's possible because if AER is overbought right now, which, folks, that's a nice setup. Everybody see this? Actually, this is a really, really nice setup, strictly from a technical perspective right now. Okay? Trend is down. Stock is overbought, sitting at the top of linear regression. You have a doji today. The 49, which is the blue, is below and crossed the 89. So, you know, I could see where people are bullish here in December because people are bearish here for the short month. So, you know, you could potentially look at shorting AER, and that's pretty inexpensive, folks, right? Just from a directional sense, 35 cents. Is that cheap or expensive on a $43 stock? Hello. And that's getting the mark, not even trying to put in a limit order for, let's say, you know, 30 cents and getting filled. Is 37.5 realistic of where it could retrace to? Well, based on a 9.52% move, if you take 1 minus 0.0952 and then multiply that by the stock price of 43.29, gives me 39.16. So not quite. Maybe people are expecting it to tank further. So if I use strictly some technical perspective and say, okay, let's just do a fib retracement here real quick. Uh, 61 would be 38. Maybe I need to stretch this out a little bit further. Okay, let's do this then. Let me move that. And let's do from here and see how much it's retraced to its from its high. Now it's stuck then right now between the 50 and the 61.8 as far as oversold, overbought, oversold, ran up. So short-term move, maybe make a little bit of money, maybe not stretched all the way down there. As soon as this is maybe 50, 60 cents, take your money off the table. And then, of course, when things get to be oversold again, you can play the run-up back up. Should be a run back up in here. Yeah, 75% probability. Anyways, don't want to waste my time too much with a not very active stock. Okay, so I did not find any earnings on the short side other than this right? Which was that 7 out of 7 right here, which, you know, on a 3-month chart actually looks pretty good to short. Right? That looks like a pretty good chart. Trending down. The low is 35.7, so the difference between here and 43, 37 is possible. All right, so you could think about that. I ran, anybody interested in me talking about some calendar spreads today? Anybody want to look at some of those? I'm going to go over the usual suspects for some of the newer people. I know Bob is definitely interested in it. But for some of the newer people in, I'm going to go over the usual suspects of what you guys need to start looking out for. And this is actually, I derived this from a list of last year. When I was doing webinars last year, I saved all of my sheets of what the homework and research that I did, which is great, guys. You've got this right now. You know, it would be great if we could go through a whole year like this, and then guess what? 90% of our heavy work could be done by simply looking at this Excel sheet and say, hey, what was I looking at last year at this time? You know, you've got your list, boom, you can take a look at it, rather than have to go through all the different processes to be able to find it. Other than, have me deliver it to you, you also have that. So, first is gold, G-O-L-D, Rand Gold, right? You guys know that, I'm sorry, Rand Gold Resources. It's really been beat down. Today, a kind of a nice positive pop-up. And you've got a half cyan here, 75% probability. And, well, that's not a great, I thought I had a 90% trade in here when I first did this. Well, there's 70%. 50. Wow, not real good odds. So be careful about that one. INT, World Fuel Service. Anybody trade this? What the heck? Holy Toledo. See that? Jeez, oh Pete's, really? From 35 to 42, $7 on a stock that opened at 35. Wow. 20% move in one day. Something must have happened. One of our members said maybe it's GLD that I was thinking of. It could have been just the gold tracks. Yeah. There you go. Yeah, that's a little bit better. But again, if the ETF GLD, which tracks all the gold, moves, then there's a high probability that GLD moves. The ones I'm talking about to you right now from last year are the ones that I made money on, folks. Doesn't mean you're going to make it on this year. Okay, that's where you have to do a little bit more due diligence, but at least you can say, hey, these are high probabilities that moved last year. And Jerry, thank you for bringing that up to me. GLD does show a 8 out of 9 years that it's gone up long. Is it beat down? Yes, it is. Really took a hop down. Everything's, all the gold's been beat down pretty heavy. So has it's moved from way down here to here. It's been a big move. It may continue the pattern, but historically, you got an 8 out of 9 year probability that it's going to run up. Of course, last year it didn't do that, did it? It ran straight down and finally bottomed out at the end of the year and then just took a major turn upwards. 80% probability. 90 there. Well, take a look at it, folks. I mean, I'm using best rating per zone. It's saying 8 out of 9 years from the 22nd to the 24th. But then there's a 90% probability for it to short. So keep that in mind, GOLD. We went back to INT. That's crazy. Need to look at fundamentals to find out why that happened. If I change this to best profit per trade and just highlight this whole entire area and let go, 92% probability out of 13 years. If I do best rating of whole zone to refine that, 78.52. Now, what I'll do is I'll start download real quick. It'll adjust and give me 10 years worth of history. Now I have an 80% probability, 80% probability, 90% probability. Forget about it. I don't like this at all. No action. Forget about that trade. FLS, Flowserve as it's called. Diversified company, 81% probability. And then again, there's an 81% probability. If I do it from here to the end of the year, 80% probability. Is it beat down? Yeah, well, it started to track up. Open mouth alligator MACD. Let's throw it into the bigger picture, see what it's doing, FLS. Well, it's bounced off the 89 here. Or I'm sorry, this is the 821 EMA, but this is a 2-year monthly chart. This is a 1-year weekly. Starting to come up, bouncing off of the 8. And of course a daily, 6-month daily, we have this thing almost ready, the 8 crossing the 21. From a technical trading perspective, if that's all you saw as a trigger, you could load up and let it run if that crossed. But we also have the added confidence to know that historically there's also a good probability move of 80%. Let's see see if it's worth even looking at on FLS. I didn't even look at that before I go into this. Yeah, the 70s don't look too bad for $1.10. 1.5%, 1.3, 408. Still not something I'm real excited about. Not a lot of action. Joy Global is the next one, JOY. I had a move on this last year that I made money on. So take a look at that, see what kind of open interest is. Let's see. Joy. A lot of people out of the money here. Way the heck at the 60s. Well, I'm sorry, this is in, geez, half-cent increments. Wow. December, $52 stock. What's a $5 spread? I normally like $5 spreads, but it doesn't mean you still can't make money on a $2.50 spread if it's cheap. Rule of thumb, pretty simple with spreads, be it bull call or bear call. So if it's a $5 spread, make sure you at least can make 100% on your money. So that means buying it for under $2.50. If it's a $2.50 spread, make sure it's under a well, whatever, half of $2.20, yeah, $1.25. So this is a little pricey, but you're also buying time. Monsanto is the next one I had. Let's see if there's anything in that. Well, that thing looks like it rock and rolls up. This blue line here looks like 08. Yep. So if you discount that year, because that was not a normal year, it was an abnormal year, highlight that, 81% probability. Where is it sitting at right now? Right there. Did this little dip here, pulled up, did the dip, pulled up. How is it from a technical perspective? Well, linear regression is down. Got a MAC that's pulled up, but I don't like the fact that I've got lower highs. Of course, it didn't go lower than this. It actually, well, it did actually right here. Not by much. And it's trying to pull up. Now, if this is a bearish candle, then that's not a very good sign. It's getting resistance at the 89, and it may be pulling down. Doji, what did I have here? Oh, that's a bullish engulfing pattern here. Okay. Again, this has to be coupled with other technical indicators in order for it to trigger. I am working on something, and it's a slow process for me because I'm doing so many other things. On my charting that I've developed here, it's simply this. When I say I developed, it means I put these set of indicators together that seem to work very well together. You know, a lot of people have their own methods, RSI, CCI, you know, whatever the case may be. But this set of indicators is pretty doggone good. And I'm putting together writing a program, a script, if you will, for a scan that we can do here. Like what I did, where the heck was this? I think this is where I had it under quotes. Fundamentals, scan, stock hacker. No. I may do it either in here, but more than likely it will be under quotes where you're going to be able to load a list, and it will have, you know, like it'll have mobile breakout. Instead of mobile breakout, though, it's going to have I'm doing just one set because the mobile breakout is just this one right here. But I'm writing the script for the PPS, the MOBO on the main chart, the DPO MOBO on the subgraph, and the hull. So I need to write it properly because the hull always triggers first. So if I have in other words, if I have a trade that this triggers next, this triggers, and this triggers, and I have to do a combination of all of them because they don't necessarily go all in sync. Generally speaking, the PPS triggers before the MOBO. You can see that right here. PPS triggered, then the MOBO, and then it tanked. PPS triggered, then the MOBO, then it ran up. So I'm writing a script on that, but I have to write a combination, and there's multiple ways to do this if there's 4 different indicators. The other thing I'm trying to write in is when it's showing a top of linear regression as well as below. I'm also trying to write in as one of the conditions is the 49 above the 89 or is the 89 is the 49 above the 89. So it's going to take me a little bit, but once I'm done with that, I will share all that with you, and you guys can load that, and then you'll have a nice scan you can run on any universe of stocks and, you know, look at it every day and say, hey, what's breaking out? You know, like this one right here. What is this? Jazz. Oh, no, that's just the low. I'm sorry. But you can see the MOBO breakout. So let's see what that looks like. If I went to, where's the chart? There it is. Well, that was old. I think the script that I wrote originally for this encompassed several days before. But anyways, I'm writing that, guys, and once I'm done with that, I'll share it with you, and I think it'll be an added benefit for us to be able to make money. Okay, let's go back to Monsanto because that looked like a nice run. The 120s for a directional play. $81. Let's look at what a January is on this. Now see, when I see that, that gives me a tremendous amount of confidence that this is the direction I need to go. I went from not a lot of excitement to a lot of interest. The 120s. The 120s. 622 contracts bought today. On the December, January is 1235. So if you wanted to buy some time, right? And if you want to even get into this cheaper, sell the December 120s and buy the January 120s. Now your cost is 56 cents to get into a January 120 call. You just cut your cost in half. So that's another technique to be able to buy some time for cheaper. As you sell a front month and buy a further out month. Now, you could also say, well, geez, and this is what I would do for more of this. I'd maybe get closer to the money so I have some more intrinsic value and sell that month, sell the 115s, and then buy the January 115s. Now I'm in the 115s for 74 cents versus the 120s for 56 cents. Again, nice way to get into closer to the money on a calendar spread. And if this thing rock and rolls, of course, what you're selling right here, you're going to keep, that's going to deteriorate to nothing because the stock is going to go up and you've bought yourself the 115 Januaries for 74 cents. So that's not a bad move right there. You can also look directionally and simply do the math. You could maybe even take a shorter time frame. There's your 11 out of 11, the 19th to the 8th with a 6.54% move. (6.5%) gives you a target of 121. Amazing how that works. Amazing how that works. That's where you got all the people stacking up. Okay, Monsanto seems like a pretty decent one to take a look at. Make sure it breaks out though. Have a system like what I would do is I do the 10-day hourly, 5-day 15-minute, 2-day 5 minutes. So I've gone from 1 hour to 15 minutes to 5 minutes on the day that I'm looking to pull the trigger. And if you engage the links, then all you have to do is type in one symbol and it'll automatically populate all three of your flex grids. So I would wait for a trigger where I would see the 8 EMA, right? This has already crossed over. Looks like it's going to cross over, but you know what I mean? In other words, you have a situation like this, right? So you have a breakout. That's what you're looking for. You're looking for a breakout. Okay, so that's Monsanto. Let's go to another one, FFIV. Now, this may be an earnings trade. I don't know. 85.71. Let's see what FFIV looks like. That's a bullish engulfing candle right there. So they obviously already had earnings, and they actually did good, but it was not an earnings trade, as you can see. So it's an after fact, and the people running with it. So due to the fact this is a bullish engulfing candle, it's running up. This is 3 months, of course. Let's take a look at 6 months. Yeah, there's more room to grow. The top linear regression is 134 on my Thinkorswim charts. FFIV on a 6-month chart for best choice is 128. This is one standard deviation. My TOS charts are 90% width from the mean. So it creates more of a situation where price has to really stretch to break the bottom or top of linear regression. So that's why you see a higher projected linear regression price out. So it is trending up, hit the bottom, earnings, bullish engulfing. And what do we have potentially here? 11.75. Let's see what it's done so far. Well, it had a nice little move right here. Kind of flattened. So let's see if there's any kind of interest in FFIV. Yeah, look at that, man. Somebody went out and bought 1,000 contracts at the 145. It's not stretching to 145. They may be selling these contracts is what they're doing. Remember, there's another thing, and that's that probably 80%, and I had an argument with Brett about this, but I've read too much literature. He's trying to use some statistical probabilities, but I don't think that's true. I haven't done the math on it, and I haven't done enough research, but everybody's heard the fact that 80 or 90% of all options expire worthless, right? Give me a yes or a no. Has everybody heard that before? Okay. If that's the case, then what should we all be doing? If 80% of stuff expires worthless, that means 80% of the people are wrong out there. Either that or somebody's taking advantage of what? Selling premium, right, Bob? They're selling premium. They're doing credit spreads. Okay, spread trading, a lot of people say is BS. I talked to a guy today from Delaware. Oh my gosh, I hope he never listens to this recording, but he was a pill, let me tell you. He was a big pill. I think he was part of the old New Jersey boys, if you get my drift. I mean, he talked that way. This guy, though, I kid you not, trades at or out of the money, directionally only, and trades 500 to 1,000 lots wide on companies like Priceline, Google, CMG, ISRIG. Guys, you know what kind of money he's playing with, right? Huge money. And of course, all he does is discipline himself on one thing. He's got his system, 10-minute chart, crossovers, yada-yada, a lot of confidence, pulls the trigger. Sometimes he's in and out in one day, sometimes he's holding, 3-4 days or a week, but not usually much longer than that. Whole point behind that is there's something to say about picking one strategy and becoming good at it. On the other hand, I also believe diversification is a key to being successful, but not necessarily spreading yourself thin. Too many people do too many things and then never become an expert in one, never really make money. Make money a little bit here, lose over here, and next thing you know, after a course of the year, you say, oh, geez, I broke even. But did you break even? No, you lost money. You lost time value of money, you lost taxes that you got to pay on it, you lost commissions you got to pay on it, yada-yada. So I think it's important to develop a strategy. I think credit spreads or spread trading reduces risk, and over time, you'll be more successful. I think an occasional directional trade on a high probability trade Again, it's a little bit of rolling of the dice, guys, with earnings, you know. But if you have a confidence and you've done some fundamental research on a company, you see that all the cylinders are clicking, and you've seen me, guys, go through this. I don't want to belabor that right now, but you've seen me go through a litany of sites to help with a fundamental, like fortraders.com, Seeking Alpha, Earnings Whisperer, MSN Money, Finviz. And folks, I got a slew of other ones that I look at as well. And that's just one. I also have my trading. All of these that I've saved as well that I'll look at. I know where to look for all of these things, but you want to get some research done from a fundamental aspect and get a little bit familiar with the company you're putting money on. Priceline's a great company. They've got an unbelievable model, and they keep just smoking earnings. Eventually, though, you got to be careful. Too much of one good thing ends up being what happens to people who traded the third quarter earnings on Google in 2012, right? Or even this year, it wasn't a great trade. It did well, but they did not just explode that 80 to 100 points that everybody expected. So let's just keep that in mind. So focus, in other words, focus. That's the whole point behind that. FCX. This little area in here. There's your trade, 63 cents. Oh no, what did it do this year? Oh my gosh. What happened to Freeport-McMoRan? Great company. Looks like it fell off the cliff. Wow. $38 down to 27. My gosh. Geez, oh Pete's. That's one to do some fundamental. I mean, this obviously got pulled hard with the market, but it started way early. It was way overbought, and it's, lost a tremendous amount of value, man, 30-40%. Before I trade that thing, I would probably want to dig in a little bit and see what's going on with that company. But I did make some money off it last year. Did anybody trade Coach this year? Did they do okay on earnings? No, they didn't, did they? They tanked. Earnings estimate was $45. It came in 53. Must have been guidance. It was bad. And you could see distinctly how when that 49 is below that 89, that's the trend. You have the leashing effect, though. See, it leashed away. This kind of continues to go in its same direction. So price leashes away, comes back to it, leashes away, comes back to it, leashes away. That creates a pattern, a zigzag pattern downwards. So be a little bit concerned about getting into Coach. Netflix was another one. Anybody trading Netflix? We talked about that. Mark Cuban bought 50,000 shares after it lost. So you finally got a breakout on a MOBO, on the DPO, the PPS. So it may be time to be looking at getting into some Netflix. Yeah, it's bouncing off the 38 right now as retracement. So you could look at 405s, 410s, 420s. This would be a resistance area because that'll catch up to the MAs. So what is this? Oh, that's the 450s. It's way too far out. Yeah, there's some people looking at the 400s. There's some good open interest there. $388 stock, $3.88 times 3. So you're looking about $11 to be under 3%. So the 405s is not a bad bet on December's. If you wanted to buy some time on that, you could stretch if you wanted, just to, people go way out here. Now, what else you could do is you can go way out of the money and sell some puts, collect some money, right? So what you'd do is you'd sell closer to the money, something way out there. I mean, you'd really want to stretch out there. Let's say, I don't know, the 330s is, again, this is a directional trade because you're expecting this to continue to go up. It pulled back a little bit today, but let's see, if you, trying to look at spreads here. If you sold that and then bought this for protection, well, it's a $37 credit. $37 on 500 is about 6-7%. I mean, that's what you get for doing credit spreads, but you can do a lot. And the whole goal of this is to pocket money and get paid for trading. So that's another technique for selling. If you want to sell premium and just collect money, right, go way out of the money, where the likelihood and chance of the security, and you're going against the trend. In other words, people here are expecting it to go down. That's why they're loading up. Okay, you're seeing on charting everything going up. You also have the confidence of knowing from a seasonal perspective that things are going to go up long, right? Even all the way up into December. So if I took this whole area, well, you still got a 76% probability. So another way to trade that. All right. I didn't go over my list. Calendar spreads. I ran this list. Keep in mind, guys, and this has been known fact with Best Choice for a long, long time. The earnings representation on all companies is not exactly accurate. Okay? So when you're looking at earnings and you see a company that perhaps you would like to be able to do a calendar spread on, you want to go to linear regression, you want to go to 2 years, because I used a 2-year. This is great, right? And you're showing divergence between price growth and earnings growth. That's why you want to do calendar spreads. You want to see this. You want to see tremendous price consistency where it's not bouncing a lot. And then you want to go to an option chain, and you want to look at probably about 6 months. And you're looking at what is the cost. And you want to look at monthlies. Okay, what is the annualized premium that somebody is willing to pay for spot month? And ideally, you're playing the pullbacks for calendar spreads. Then you want to look at 6 months out, like May, and that's 10%. So the spread between 10% on what you're going to pay for, and my gosh, there's a lot of volume today. Wow. Holy crap, I just noticed that. That's pretty cool. So there's a potential trade right there. Somebody bought 5,062, or that's how many contracts were bought today. Twice the open interest for the May contracts on AIG. And then if you turn around and you sold that front month, which is a premium of 29%, the difference between the 29 and the 10, which is basically around 20%, let's call it, is what you're going to make. Oh, no, that's the 54s. I'm sorry. Here's the 55s. It's 19%. So make only about 10%. Not a huge spread. But my gosh, a lot of open interest, huh? 52 cents. Maize is $2.89. A little pricey. Anyways, it's getting late. I'll put all of these that I've looked at on the spreadsheet. You guys can take a look at them. The whole key is to play the pullback when you're doing calendars. Let this run up. You want to sell that front month call when the thing is overbought, ideally. That way you maximize the premium on that. And the chances of you getting called out are infinitesimally small. Okay, any stocks you guys want me to look at before I wrap up? Go ahead and type them in the chat if you want me to take a look at them and analyze them. I'm more than happy to. Going once, going twice, sold. Okay, guys, good luck trading. Good session. Feel free to email or call or whatever if you have any questions. I'll try to get to you within 24 hours. So with that, I bid you adieu and good trading, everybody.